afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, and he's coming out of Singapore. Now, Vishnu, as always, lovely to have you on the show every Monday.
Always good to be here, Brian. Thanks for having me.
Now, Vishnu, before we get your insights, we'll take a look at how cryptocurrencies are performing and then take a look at how regional stock markets are performing. We're going to start with Bitcoin, which is at 21,727.5. It's up 0.77%. Ethereum is at 1,728.76. It's down 1.74%. Now, looking across the regional equity markets, first of all, China, Hong Kong, and South Korean markets are closed for a holiday today. So we start with the SGX. The SGX is up 0.22%. KLCI is up 0.1%. The ASX All Ordinaries is up 0.02%. The Nikkei is up 1.06%. And that's it because the rest of the markets are closed. So tell us, what is your view on how markets have performed in the first half of the day?
Well, I mean, it does look like there's carryover buoyancy in the equity markets. I mean, we did see that U.S. markets finished strongly for the week, not rallying without any restraint, but rather still on a solid positive note. So just to recap, since Wednesday last week, it had 3 sessions of gain. That saw S&P and Nasdaq and all rise somewhere in the ballpark of 5%. So that carryover optimism seems to have been in place. The corollary of that being the dollar softening also appears to have helped with the mood in terms of whether Asian currencies are slightly firmer or in a broader sense where it doesn't add or no pun intended, it doesn't add fuel to inflation fears. So we've had that mix that's working out, but I think markets are also trading cautiously and fairly quietly because, as you pointed out earlier, a lot of North Asia is out, so there is a little bit of a deficit of cues for markets to go on. I mean, they would want to see what's going on with China, whether there are any new announcements. So a little bit quieter on that end. And tomorrow there is US CPI release. To recap, last week, Fed speakers were sufficiently hawkish, but markets brushed that aside, and they went on with lifting equities and dampening the dollar. So maybe because that has run a little bit, I think markets will be cautious ahead of tomorrow, just in case US CPI numbers give rise to another hawkish Fed wave that could knock things off. So markets are not entirely sure. And if I may bring that US CPI thing just one step further, the broad expectation is headline CPI comes lower, but core CPI may not only be sticky, it may even rise. So on that day, it's really whether markets want to look at the overall glossy picture and say, let's carry on with this risk on. We have got some momentum on our side, or they turn cautious and say, actually, when you look under the hood, it looks like the Fed will remain aggressively hawkish. So let's be a bit more cautious. So that's really, I think, the question for the week.
But also, Vishnu, the Fed action for next week is pretty much baked in, isn't it? Because 90% of analyst poll basically say that it's a 75 basis point rate hike expected next week.
You're absolutely right. I mean, in the run-up to this meeting, maybe the question might have been 50 or 75. Increasingly, 50 dropped out of that race. And 75, and that squares with the fact that we've had a Fed that's quite hawkish, and so putting 2 and 2 together, markets can't see hawkish talk going together with a step down to a 50 basis point hike instead of maintaining a 75. So that remains the picture. But despite that being baked in, I think there are still a few moving parts that markets are cautious of. In particular, they want to see. Because we know that the so-called dot plot, the median or the forecast for by the Fed FOMC members, they want to see where the new September updated dot plot shows yields being, or rather rates being residing at. And a key one is where you get peak rates or terminal rates, because as of now, the June dot plot suggests that rates will peak out somewhere in the ballpark of 3.25 to 3.5% range. But if you hear the recent comments, that is suggestive of rates peaking above 4% and being maintained higher for longer. So the post-Jackson Hole narrative of higher for longer, there's a certain element of quantification to that when we come to next week. And that quantification hasn't been baked in. Even in the OIS curve, markets are expecting sub 4% rates peaking next year, and some are betting on rate cuts starting next year in itself. So that's one potential for a little bit of a knock to markets.
Now, one of the key things that obviously this has an impact on is Asian markets, which have been lagging in terms of rate hikes. Japan aside, obviously, which has a different policy altogether. Now, if you look at the impact on currencies, and we'll take one country as an example, Malaysia, you've seen really that ringgit suffering dramatically because of the lagging interest rates. What is your view on how that's going to impact countries like Malaysia, and will their hands be forced after the 75 basis point rate hike next week?
I mean, that's a really interesting question, and one that requires us to maybe take a closer look at things across the region. And this is where it gets interesting, because if we look at it from a slightly longer horizon, if you look at it from, let's say you start in September last year. Why September last year? It's not there's arbitrarily a year ago, but also it's the first time that the Fed actually signaled that they'll start normalization with taper in November, with rate hikes in 2022. So from that start of that process, if we track how currencies have performed, ringgit is somewhere in the middle of the pack, down between 7 to 8%, whereas Korean won and all are down, somewhere in the ballpark of 14 to 15%. So you've got severe underperformers, but overall, yes, all of them have taken a hit. And you are absolutely right in pointing out that one of the factors there is whether they've been a laggard in terms of rate hikes and catching up with the Fed. The BNM had an opportunity, but they chose to do a 25 instead of a 50. And I think that tells us that on a trade-weighted basis, maybe the BNM would much rather take a gradual approach. They've always been known to be a steady pair of hands. So we don't see them reacting to a 75. But if, like we discussed, that 75 leads to a sudden revelation of far more hawkish outcomes, and that leads to very discernible capital outflows that causes huge volatility in Asia FX markets, we could see a lot more reaction coming through from the BNM. But if the BNM is forced into that position, rest assured they won't be the only one. I think you'll find the likes of Bank Indonesia and maybe even the Philippine Central Bank and a few others also having to pull the handbrakes, as it were.
Now, Vishnu, as always, thank you very much for coming on the show, and thanks for your insights.
My pleasure. Thank you for having me.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners, TV stations, radio stations, and websites. Thank you very much for tuning in.